You are watching Stockwatch. I'm Zinati Gumba, and joining me to unpack your stock-related questions today are Pierre Verster from Protea Capital Management and Drikus Combrinck from Capicraft. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag Stockwatch. Thank you so much for your time, gents. Let's dive straight into the questions on the stocks. I don't want to talk too much about the expectations for the budget. I'm sure we will see enough action, particularly on the currency front and maybe in the bond market tomorrow after the budget. But one of the movements sectors where we've seen lots of interesting movements is the gold sector. I do know that yesterday it was actually down quite a bit. I actually think today there has been some sort of a recovery there. So starting off with a gold question, let me just get to it. Drikus, can you shed light on reasons why the gold shares were down actually yesterday, and maybe talk about the rebound that we've seen today?
Well, nothing goes up in a straight line. I think that's the easy answer. So a bit of profit taking. I do think if the gold price holds here, then the gold miners are, very cheap. I think that they've had trouble, controlling costs over the last few years. The costs, like cyanide and, petrochemicals, which is a major input in energy, as, in 2022 skyrocketed with the war in Ukraine. But those are normalizing at the moment. So I think the reporting periods that lie ahead, you would see that they're going to get some, cost control. And with that, you've got a higher gold price as well. So a widening in margins, if you will. And I think they are undervalued. If the gold price stays anywhere near where it's at the moment, it can even fall down to, let's say, 2,500 to 600 in the high 2000s. If that's the average, the gold miners are quite cheap.
Well, I guess it's also been quite interesting because even yesterday the gold price was slightly up, but these gold miners were actually down. And I did an interview for technical analysis with someone earlier on, and in those gold counters, you're actually starting to see a disconnect emerging between the gold price and the shares of the gold miners. Do you think that, JP, maybe with some people taking profits, that we can start to see that in the gold miners first than in the gold price?
Well, I would say that if you think about the gold price in rands, that is the revenue you would compare against the rand share price of a gold miner. But that's not all that comes into the equation. Costs also come into the equation. As Drikus said, they were in a pinch a number of years ago, 2022, and now those jaws have opened.
Yeah.
Which means that the gold price has gone up, but the costs have been roughly sideways to only slightly up. And that's a wonderful situation to be in. It's almost like what the platinum miners were in 2 to 3 years ago, where the thing you sell is just at such a higher price than the cost of getting it out of the ground. The problem with commodities is that generally does not stay for too long a time where you are allowed to make these enormously wide margins. So yes, the gold mines at the moment are making a lot of money. They look cheap relative to the spot price of gold, and on a day-by-day basis, maybe some days you won't see that correlation, but that correlation does hold over the long term. The question is, for how long will this last, this very high gold price relative to the cost base of the gold miners? Maybe a year, maybe two. Some of these platinum miners had almost 3 years of very good times, and then things normalized again. So depending on your view, my view is we will normalize in the next probably 2 to 3 years. So you can play in the gold miners, but I still say they are there to trade, not to invest in. So if you do buy them, just remember to sell them before those jaws narrow again, before you get bitten by the gold price coming down and costs going up.
Yeah, there really has been some nervousness with, of course, the climb that we have seen in those shares and the gold price, that some people thinking that maybe they should short or take off some profits. Just a second question for gold counters. I owned the major gold shares, but lost at a huge profit a few years ago. But I recently got back into the major gold counters like Gold Fields, Anglo Gold Ashanti and Harmony, buying the recent dips. These two have begun showing golden profits in less than a week. Be a little more greedy or sell. I guess at this point, for anyone who is not in those stocks, it may be a little too late. But for someone who is already in there, who maybe would like to make a little bit more money, Drikus, would you say that they can still do that or just sell?
No, the viewer sounds like he has got a lot shorter time frame than I have. Let's put it like that. So I look for value. I think there is value in the gold stocks at the moment, but it depends on your view on the gold price. So if you think the gold price going higher, you should buy here. I think there should always be in a multi-asset, multi-strategy portfolio. You should always have a allocation towards metals like gold. It has got its purpose in certain economic regimes or scenarios when it performs. One must just remember that a portfolio is like, let's say, like an engine. It's like all the cylinders shouldn't fire at one time. If all the cylinders fire at one time, then you're going to get a hole in the block. So construct a portfolio where some of your holdings are going to disappoint you, but they will come through for you when it matters. So I will always have some gold exposure. The question is really, do you want the gold exposure or gold miners? I like the alternative, and that is gold royalty companies that you can get offshore.
Okay. Also very interesting is the companies that the viewer has chosen here: Gold Fields, Anglo Gold Ashanti and Harmony. And from the technical analysis that I had earlier, Anglo Gold Ashanti and Harmony were actually the top gainers there, with Gold Fields kind of lagging in the gains that it has experienced. What do you think of that composition, JP?
I can't comment on the technical analysis. What I would say is all three are more or less in the same boat in terms of the dynamic. So some of them have got gold mines in different geographies, which means their costs are expressed in different currencies. That has got an impact, and that has benefited, for instance, Harmony, which was historically the more marginal of the three, with a lot of cost base in rands and in whatever the currency in Papua New Guinea is. And that's different to the likes of Gold Fields that has some Australian dollar costs, for instance. So the currency of the cost base is important to keep in mind, but the dynamic over the long term is very, very similar. And that is why I agree with Drikus. I would much prefer to have a royalty company or then some exposure to the actual gold metal itself versus the miners, because over the long term, they've not shown that they can keep up with the price appreciation of either the underlying commodity or those companies that don't need to operate mines. They don't need to dig holes in the ground. They've got the right to the gold, and then they pass on that right and they sell that right, and they get royalties for that right. And that is, for me, is a much better business model and still gives you exposure to gold, which does move inversely to a lot of other assets. And so you get the benefits of gold without the drawback, in my mind, of owning the actual miners with all the operational risk that comes with that.
All right. Well, sticking to commodities, there's a question on Amplats. Amplats CEO noted that special dividend was the most efficient way to realign the group's capital structure ahead of the demerger. From my understanding, how does removing cash from balance sheet realign capital structure? Drikus, your thoughts on that special dividend?
Yeah, so they're trying to get rid of the Amplats holdings or decrease it over time in an orderly manner without, having to sell a lot of it like they've done, I think 2 times now already. They've gone to the market in private placements and sold them. And so in an orderly fashion, decreasing the holdings of Amplats. I wouldn't be surprised if they do the same with Kumba. It's not impossible. Kumba just declared a proper dividend, not a special dividend, but a proper dividend. Sits with another 10 billion on the balance sheet. That's Kumba. So it's interesting to see what Anglo is going to do going forward. But let's leave that for the stock pick at the end.
Okay. I want to talk to you on another company there, JP, going into the tech space in Naspers. My 50 Naspers shares are up a whopping 138% from the time when I bought the dip. It is now hovering around 4,700. Do I sell or wait for even more upside? And that share has actually been climbing. Well, actually, this question was yesterday, and then today up by a whopping 152%. Of course, the extension of gains that we've seen today, hovering at around 4,850. Do I sell or wait for even more upside? It has been going up and up and up. Your view, JP?
So remember, the price of Naspers is driven by the price of its investment in Prosus. And the price of Prosus is driven by its investment in Tencent. And Tencent has risen by more than 30% in Hong Kong dollar terms over the last month or two. But all Chinese tech shares have. Alibaba has risen even more. It's up 50% over the last 2 to 3 months. So the whole tech space in China has seen quite a bit of a relief rally since the beginning of this year. Today, Xi Jinping had a meeting with a lot of tech leaders, and he even shook the hand of Jack Ma and Pony Ma and a few others. And Baidu was not invited, and therefore the Baidu share price fell. But the other share prices went up. So that handshake has got a lot of value. Yeah. And it shows that the Chinese government is taking a softer line towards their technology companies. They actually want them to be global leaders, like we saw with DeepSeek as well. And with that change in the attitude of the Chinese government, these shares have done very well. Now, the sentiment was so bad, it won't go up in a straight line all the time, but I still see value in the likes of Tencent and Alibaba shares. And therefore, maybe you trim a little bit of Naspers, but I wouldn't sell all of it because I still see significant value, and it's still trading at a significant value relative to the value of the underlying Tencent investment.
Baidu seeming to be excluded from a lot of rooms, even was excluded as a partner in Apple that went for Alibaba for its artificial intelligence functions. Let's get into healthcare. Could you please ask the panel's view on Aspen? Is it a buy at current levels? JP?
I'm neutral on Aspen at current levels. We should get the interims to the end of December in not too long, probably in the next month or so. And a lot of eyes are going to be on how they are utilizing their capacity, filling some of the GLP-1 drugs for the originator, the pharmaceutical company that actually creates those drugs. And if they have filled a large part of that capacity, you'll see that in results, and that will be very positive, and the share will probably rise. And if they have not delivered on that and disappointed the market like they did roughly 6 months ago, then you could see further pressure on the share. So that's why I'm neutral on Aspen at the moment.
And it's quite interesting because I would actually think that the partnerships with the Novo Nordisk and Eli Lilly would have had would have seen some share price buoyancy on that. Drikus, your view on Aspen?
No, I'm neutral, as John Pierre says.
Okay. We will see what they come out with when they take out their results. Let's get into, JP, a specific question for you. Do you have any exposure, long or short, in Japan, and which counters?
Yes, got some long exposure to Japan. I won't give all the names, but I'll mention 2. SoftBank, which is the big technology conglomerate. It used to have a big stake in Alibaba. They've sold most of that now, but still a big stake in ARM, the chip company that sort of competes with NVIDIA, although it doesn't come close to how good NVIDIA is in creating those chips, those GPU chips. And then Tokyo Electron, a company that makes semiconductor equipment. So those are 2 names. Japan has done extremely well the last 3 years, to a large extent because of a normalization of interest rates. Now, when interest rates go from negative to slightly positive, that is most positive for banks. And in Japan, most of the banks are part of conglomerates that also have commodity trading operations. And those are the companies that Warren Buffett bought into 3 to 5 years ago. So he picked up on that much sooner than the mere mortals like I did, and he did very well in those banks. I missed the trade in the Japanese banks, but at least we have some SoftBank and Tokyo Electron, which has done well for us on the back of what has happened to semiconductors.
All right. Well, let's get into beer. Drikus, growth potential in AB and Bev at present levels.
I think so. I think the margins should continue to recover, especially in Southern America, where some of the core markets are. And they continue with the premiumization drive in certain brands. And I think it's on the cheap side. I think it's forward earnings of about 15, which isn't too much for a beverage company, and with the brands they have. I must say that longer term, it looks like people are consuming less alcohol per capita, and within alcohol, they are consuming less beer. So that is something to take heed of. But those who continue to drink beer like to drink more expensive beer as they age. So there's a pickup there.
Your view on the growth trajectory of AB and Bev, JP?
Yeah, I think Drikus has summarized it quite well. I'm probably a little less optimistic about the fact that older people do drink better quality beer, that's for sure. But at the same time, people are having less kids. So there's an increasing number of middle-aged people that become older and haven't even started drinking beer. Can you believe it? And that is not good for the beer industry. So with so many
what is the world coming to?
Exactly. It's this world of ours, Donati. I don't know what's going on with the youth not drinking beer, you know. My goodness.
I will say though that 0% beer also tastes really good. Let's go into short-term insurance, Outsurance. This has been one that investors have liked, I think, for the past year. The viewer is asking, do you expect Outsurance to breach the price of 100 Rand in the short term? Drikus?
No.
And that's fine. It's like at 64, 65 Rand.
No, I don't think so. No, it's not cheap. It's not cheap. It's an economy that's really struggling at the moment. So if the economy fires up in the second half of this year or somewhere, sure. But it's sitting on quite demanding PE multiple. And obviously its core market isn't growing much. So
that's actually quite a target. From 64, 65 Rand to 100 Rand, JP, and especially in the short term.
I think it will reach 100 Rand, but not in the short term. The company is, I almost use the word dominant, but it's not dominant. It has a leading market share in its chosen markets, being South Africa, Australia, and now more recently Ireland. And I do think that over time, the company will keep on compounding value as it has done at an above average rate. It's very cash generative. So you might not quite see it in the share price, but if you add back dividends, you're not too far from 100 Rand if you use the previous dividends to buy more shares, or what the value of your total shareholding would have been then. So don't forget about the dividends that a very cash generative company like Outsurance pays out. But over the long term, I do think it will reach 100 Rand, just given the quality of the company and the fact that it's going into new markets and still growing its profits and generating a lot of cash as well.
There's a question that just came in, and I mean, this is a company that not a lot of people look at anymore. It's actually up 5% today, but obviously tiny compared to the nosedive we've seen in the share price over the past year or so. Transaction Capital. I don't know if it's changed its name to Newton yet. Is Transaction Capital still a hold? I don't know if a lot of people still hold it. Would there be some value unlock with the focus on Newton? Drikus, is this on your radar on any level?
No, I haven't dabbled in that share for quite a while. So I think Jean-Pierre has got more on it.
Yeah, no, I completely get it. JP,
I'm
transaction
still
capital.
holding it. Yeah, and I bought a little bit more a few months ago. Like no one wants to touch it. No one wants to speak about it. Yes, they haven't changed the name of the holding company yet. It will soon be Newton. They did announce that one of the deals they did was unconditional in the last day or two. So I still think that when the next results come, or let's say when the first clean results come,
Okay.
people might give it a second look. Almost like, let's say EOH. Remember, for quite a while, no one wanted to look at EOH. And then
Yeah.
boom, all of a sudden, EOH doubles in a year. So I'm hoping for the same type of thing with transaction capital, that for quite a while, no one wants to touch it. People just think about the history, how bad the history was. And when you open your eyes, you actually see value, and the share can do quite well from these depressed levels.
Well, as we're talking about EOH, let me stick with you, JP, because there's a question also that came in. Ioco now, the share price increased, and in the last week it increased quite a bit. My average price is R3.37 with the current levels of R3.15. If I hold another 4 more years, can it pass my R3.37 average price, JP?
Not impossible, not impossible. If you work that compound return out, I can't do it in my head now, but I think it's in the teens, which isn't too much to ask. And with activists involved, wanting to make the Ioco share price great again, I think definitely the management, the operational management are incentivized to drive value in the company, and that would drive the share price up. So yes, I don't think that is too much to ask for.
All right. Well, I am asking now for your stock picks. Gents, Drikus, what are you choosing today?
Yeah, so Anglo-American, the holding company. Kumba came out with solid results today. Cash generative, solid balance sheet, net cash. Amplats, solid balance sheet, low cost producer. I'm a bit bullish on platinum. I think platinum or PGM should see a continued recovery from these lows. And then, if you back out, so BHP Bulletin says that they don't want to pursue Anglo anymore. I don't quite believe them. But even though I think it's been good that they've lit a fire underneath the management to get some value out for shareholders out of Anglo's. It's been trading at a discount to its sum of the parts. And if you put a proper sum of the parts valuation on it, and then you see that it's copper assets, and it's got quite good copper assets, and there aren't a lot of these copper assets, these, let's say, multi-decade copper assets left out there at low in the cost curve. Then you see that it's actually trading the copper, the rump of the business is trading at a very low or quite a discount to other producers like BHP and Freeport McMoran, etc.
Right. Well, JP, let's get to your stock pick for today. What is it?
I'm picking a stock that is listed in London, but it's actually a bank holding group called TBC Bank Group that has operations in Georgia, not the US state, the country of Georgia, as well as the country of Uzbekistan. Now, Zenati, if you don't know where Uzbekistan is, it's between Kazakhstan and Tajikistan. So now you know where Uzbekistan is.
Okay.
And the interesting thing about this bank, or the two banks in two different countries, is it has a 40% market share in Georgia. And the Georgian bank makes 10 times the profit than their bank in Uzbekistan. But the population in Uzbekistan is 10 times that of Georgia. So the Uzbekistan bank is growing very nicely, and ultimately could be as big, if not bigger, than the Georgian bank. And if that is the case, there's a lot of value in TBC Bank Group. It's also a fintech, a digital-first bank. So like all banks that are winning market share all around the world in different countries, it's the banks that are winning in the digital strategy. That are creating a whole ecosystem where you can do so many other things with an app on your phone, and you don't necessarily need a physical bank branch to do it. Those are the banks that are winning around the world, and TBC Bank Group is one of them. So I haven't been to Georgia or Uzbekistan. I probably need to go and kick the tires and see the bank, but the share is very cheap, only a slight premium to book. and growing very nicely in terms of the profitability of both these banks.
My brother had his honeymoon in Georgia, so says it's quite a great country. So and also thank you for the geography lesson there, JP. Thank you for your time and analysis today, gents. Really appreciate it. That is all for Stockwatch today. Thanks to our guest Pierre Verster from Protea Capital Management and Drikus Combrinck from Capicraft. Up next, The Close. Stay watching.